China has taken a step that could shake the global balance of power. In Kuala Lumpur, under its leadership, more than 20 countries gathered. This is not an ordinary meeting or a formality for protocol. It is about a bloc that unites Southeast Asia, the Gulf states, and China itself into a single powerful orbit. Together, they represent more than $25 trillion of economic strength and over 2 billion people. For decades, it was BRICS that was considered the main challenge to Western dominance. But what is emerging now goes even further. This alliance controls more than half of global economic growth, which means it gains real leverage over trade, energy, and investment that affect every country on the planet. While Washington is stuck in endless disputes over tariffs and politics, China is building bridges, both figuratively and literally, from high-speed rail projects in Indonesia to massive oil and gas deals in the Gulf states. What is being formed is a coherent economic system, not just a club for meetings. The question is no longer whether this shift will matter. It already does. The real question is how far it will go and what it means for the future of American power. In Kuala Lumpur, history may have reached a true crossroads. China brought more than 20 countries to the same table, joining ASEAN states, the Gulf Cooperation Council, and itself into a single platform. On paper, this might look like another regional summit, but in reality, it is the foundation of something much larger, an economic bloc capable of shifting the center of global influence. The numbers speak for themselves. Collectively, these countries generate more than $25 trillion in GDP and bring together over 2 billion people. And this is not a plan for the future, but a present reality. Together, they generate about 55% of global economic growth, effectively becoming the main driver of the world economy. If such a group begins coordinating trade, energy, and technology, it creates momentum that even old powers are forced to reckon with. Many remember how BRICS was once seen as an alternative to the West, but compared to this coalition, it now looks modest. Internal contradictions held BRICS back, whereas the new bloc is being built around shared interests. Trade routes, energy flows, and investment corridors already link the participants. This is not a stage for speeches, but the outline of a parallel system where supply chains, settlement currencies, and infrastructure can function outside the control of Washington and Brussels. That is why this summit was significant. It was not about lofty statements, but about a signal. The Global South is ready to act as a single force, and subsequent events only underscored how quickly U.S. influence is fading. While the new alliance was taking shape, Washington was preoccupied with its own problems. America remains the largest economy on paper, but its ability to set the rules of global trade is visibly declining. Allies that once relied heavily on trade with the U.S. are now seeking new paths. The European Union has strengthened ties with Mercosur in South America. Vietnam has signed agreements with the EU and Canada to diversify exports. Even Japan and South Korea, long-standing security partners, are expanding ties in Asia. Each of these steps gradually weakens Washington's central role in the global economy. The message is clear. Tariffs push partners to seek alternatives, and most of those alternatives lead directly to Beijing. The vacuum created by America's inward turn is being filled quickly. This is especially visible in Southeast Asia, where trade flows are already shifting direction. Southeast Asia today is the clearest proof of how the global balance is changing. For years, countries like Indonesia, Vietnam, and Malaysia heavily depended on trade with the United States. But after round of tariffs, many of those ties began to collapse, and it was Beijing that offered them an alternative. Take Indonesia. In April, when Washington imposed 10% duties on a wide range of goods, Jakarta's trade surplus collapsed. By May, it had fallen to $160 million, the lowest level in 5 years. At the same time, imports of equipment and machinery from China and Singapore rose by more than 20%. The story is simple. Once the US market closes, Indonesia looks for new paths, and the first open door leads to Beijing. Vietnam experienced a similar blow. When Trump doubled tariffs on steel and aluminum to 50%, exports of steel from Vietnam to the United States fell by 27% at the beginning of 2025. For an economy built on exports, this was a shock, but Hanoi did not give up. It strengthened ties with China and regional partners. The numbers confirm the trend. ASEAN trade with China in 2024 reached $982 billion, nearly 20% of ASEAN's total trade. Data from early 2025 show further growth. The new version of the ASEAN-China Free Trade Agreement focuses on the industries of the future: digital services, renewable energy, and smart manufacturing. And this is not just signatures on paper. The changes are visible in concrete projects. The Asian Express cargo line linking Malaysia with Chongqing shortens delivery times for manufacturers. In Indonesia, the $7 billion high-speed rail line between Jakarta and Bandung, part of the Belt and Road Initiative, has already carried more than 9 million passengers since its launch at the end of 2023. These are clear examples of how the region is being pulled deeper into China's orbit. A new trade map is forming, where ASEAN is no longer a collection of small players in the middle. It is becoming China's factory, an investment hub, and a gateway into global supply chains. And this transformation only sets the stage for an even greater shift when it comes to the region's energy and infrastructure. The changes are not only about trade figures, they are visible in the very networks and energy flows on which economies depend. And it is here that China leaves its mark, reshaping the rules of the entire system. In Malaysia, the expansion of Kuantan Port with Chinese support has doubled its capacity, turning it into the largest hub for transshipment of iron ore and industrial goods. Similar investments are underway in Indonesia, where new cargo terminals are being built to handle the growing container flow. These ports are more than just infrastructure. They are gateways that redirect supply chains toward Asia and away from routes controlled by the West. They are firmly anchoring Southeast Asia in China's orbit and giving the region alternatives that did not exist 10 years ago. Energy shows the same pattern. For decades, oil priced in dollars gave Washington enormous leverage. Today, the grip is weakening. Around 30% of Saudi oil shipments already go in currencies other than the dollar, and new contracts suggest the share will grow. In 2023, China and French company Total Energies carried out the first liquefied natural gas transaction in yuan, a sign that even Western companies understand where the future is heading. And then there are renewables. China produces about 80% of all solar panels in the world. It leads in wind turbine exports and controls the battery supply chains. So it does not matter whether the world tomorrow relies on oil or on solar energy. Beijing will be at the center. These steps do not just diversify energy, they change it altogether. And while Asia builds new networks, the Gulf states are beginning to move in the same direction. The Gulf countries are taking steps today that 10 years ago seemed impossible. For decades, the Gulf Cooperation Council was tightly bound to Washington in matters of security and in energy. But today, those ties are weakening, giving way to a deliberate pivot toward Asia. The numbers speak for themselves. In 2023, trade between the Gulf states and ASEAN reached about $130 billion. By 2032, the goal is to raise this figure to $180 billion. And it is not just about oil. The Gulf states want to build long-term partnerships in many different sectors. Investors from the region are putting money into artificial intelligence, digital finance, and renewable energy, fields where China and Southeast Asia already lead. The shift is visible in politics as well. At the Kuala Lumpur summit, Indonesian President Prabowo openly backed China's call against external domination and voiced support for Palestine. This signal resonated strongly with the leaders of the Gulf states and showed that Asian and Arab voices are beginning to sound in unison. Once, BRICS was seen as the main challenge to the old order, but the network now being built from Jakarta to Riyadh carries even greater weight. It does not wait for an invitation and does not seek inclusion in existing structures. It creates an alternative that could soon rival the system built after the Second World War. The shift is already happening, and much faster than expected. What began as a series of trade meetings is turning into a full-fledged economic and political network, capable of existing independently from the West. For the United States, this is more than just a strategic blow. It is the first signal that the post-war order, once thought unshakable, is being replaced before our eyes by a new one. Now the question is not whether this system will rise, but what part of the world it will draw along with it. Subscribe, and let's follow this transformation together.